There are three things you need to know when it comes to an IUL or an indexed universal life. What's up, everybody? My name is Dallas. I am a financial professional helping individuals and small businesses with their financial picture and making sure they hit their goals in retirement. Today I want to talk about the IUL, and like I said, three things when it comes to the IUL, one of which are tax-free benefits, the death benefit protection, and just flexibility. So in the tax world, with the IUL, how we structure it for people's retirement, you're putting money into it. It's going to grow interest. We mostly use the S&P 500 index. There's a couple other options that we can to gain interest on the upside. And then with the IUL, side note, going off track or going off script a little bit here, when the market goes down, you have a guarantee no loss. So you'll never lose money when the market goes down, but you'll get a good percentage on the upside, 60 to 80% of the upside. Depends on the provider, depends on a lot of different things, but you'll still get the upside potential. Back to what I want to talk about for taxes. So you're contributing money into it, and it's going to earn interest, so it's going to average, well, a lot of providers have different types of averages. Mine averages about 9%, 8 to 9% a year over the course of its lifetime. So, but that being said, we're specifically structuring it, we're doing $500 a month, $600 a month, $700 a month, whatever it is, $1,000 a month. We're structuring to where you can then reap those rewards in the form of a guaranteed income stream once retirement starts. And then you would no longer contribute, unlike most whole life accounts where you're contributing money for a long, long time. In a whole nother video, we'll talk about the different types of actual permanent life insurance and what they are and what they mean. But pertaining to the IUL, when you're receiving that money, you're taking it out basically against the insurance. Think of it as like a home equity loan. But instead of paying back a bank, you just pay back the amount of insurance when you pass away, and it just gets taken out of the insurance amount when you pass away. That's what makes it tax-free. So you're leveraging your life insurance while you're alive so that you get a tax-free benefit for life. And really just depends on how much income you need for the future, how much you're able to contribute, how much time you have. There's a lot of different things, which plays into that third point I want to talk about, flexibility. There's a lot of different things that we take into consideration for, structuring the plan to make sure it works for you specifically with your goals. The second thing I really want to talk about is the insurance itself. I'm a huge advocate for insurance. I have had family members, friends who have passed away with little to no insurance, and it kind of hurts. Obviously, money can never replace a soul, and having this conversation with clients is sometimes not necessarily emotional, but I don't want to seem morbid in any way, and I'm going a little out of character here. I'm just being honest to the camera. I'm being honest to you folks. Insurance, I feel like, is a really strong tool, but you don't want to be overinsured. You don't want to pay a guy a ton of money for insurance that you don't really need unless you want just more money to pass on to your family. So be careful of who you're talking to. But when it comes to insurance, it's good to have enough to cover the house expenses, to pay off the house. If you specifically want, I want each kid to have 20 grand at least to help with, future down payments on houses or with their college or whatever it is. There's all kinds of reasons to have the life insurance in place. In this, I guess we're kind of talking about a scenario for retirement in our initial first point for taxes. The insurance amount is structured based on what's going to pay you most while you're alive, not necessarily someone when you pass away. So you're going to be using that insurance while you pass away, but even when you're 85, 90 years old, there still might be $50, $60, $100, $200,000 left in that account that would pass on tax-free to your family, even though you were collecting, who knows how much from age 65 to 85, 20 plus years of collecting retirement. There would still be an insurance base that would pass on to your family. The third thing I want to talk about is the flexibility, and I've kind of touched on it a little bit throughout these other 2 points. How much you want to contribute, what the insurance needs to be, when you want to take money, how you want to leverage it, when, where, and why. You can structure it. First of all, you could structure all that in the beginning. Let's say you're going to be putting an extra 10 grand a year in there, and at some point you're going to take that back out to purchase a rental property. You could do that. Even if you don't do that, it just will benefit you more in retirement because you put that money in there, maybe you just never found the right deal, and now you're retired, and well, hey, now you're collecting an additional rental income from the IUL instead of from an actual rental. So, but it's extremely flexible, and even if life changes along the way, and you need to restructure the plan, whether it's a great change or a bad change, whatever it is, it's extremely flexible on how we can increase, decrease the amount of insurance, how we can increase, decrease what you're contributing, when you want to take the money. It's extremely flexible to fit your lifestyle and needs every step along the way. So there's a lot of flexibility when it comes to these plans. But those are the three main things that I want to talk about today: tax benefits, actual life insurance, and just overall flexibility of the IUL. If you don't have one, you should look into it. I have 3 of them, and I use them constantly for all kinds of different things. Hopefully you enjoyed this video, and if you made it this far, I'm working on the background. I'm working on getting some lights. In fact, I kind of just noticed there's a reflection of that light in that picture. But anyway, it's a work in progress. Hopefully it looks all right. Let me know what your thoughts are on what the background looks like, or if I should just do like a plain black background with a light straight on my face. But anyway, have a great day. We'll see you guys.